So let's face it, you and I face the same problem, and that is the fixed deposit rate has been going down and down and down, and maybe it might never recover 3, 5, or even 10 years from now, right? Just look at what happened in 1998. Fixed deposit rate used to be like what, 7, 8%, and then after the crisis, economic crisis or whatnot, it has like stay about like 3%, and then it never went back up, and then now the world is going to be like a trend where you have like zero interest rate in all these developed countries. So in Malaysia, this is the thing we are facing now. It has been for the past more than 10 years or 15 years, it has been the lowest ever. And at the point of this recording, it's somewhere in quarter 3, quarter 4, 2020. But going forward, I think this lesson, this video, this information is going to be evergreen, because you should actually use these 3 methods, right, to still get a high something like a high interest rate, at least twice or even 3 times higher than your fixed deposit rate. You don't have to be, like investing into stock. You don't have to use robo-advisor. You don't have to like do day trading. Nothing of that you don't like, right? If you're not a risky person, you know that stock trading is not for you. You don't have the time, or you don't have investing experience, but you still want to get, right, at least like 2x or 3x or even up to 6x or fixed deposit rate. There are actually 3 options you can do now. Number 1 is MMF, but it's called money market fund. Like what is money market fund, right? Money market fund is basically a fund that's structured like a unit trust fund, but the unit trust fund only invests in fixed deposit. Yes, a fund that only invests in fixed deposit, not stocks, not overseas and all that, only invest in fixed deposit in Malaysia. Now that is called money market fund. A lot of people don't know that money market fund, even if you put it in like 7 days and you take it out, your interest will be prorated based on the 7 days that you put inside the money market fund, and it's very liquid. Banks, normally this money market fund is not meant for retail investor or individual. It is meant for institution who put like at least like 5 figures or whatnot, businesses, even small, medium businesses put there, whereby because the fund is big, they can negotiate a higher rate versus if you and I were to go to bank, right? And you know that, if you put in a higher amount or lock it for a longer period of time, we get higher interest rate. But because the fund manager of this money market fund leverage on the size of the fund in like hundreds of millions, they could get like 20% higher fixed deposit rate than what we'll be getting directly from the bank, and they do that in the fund. There is literally no downside to it. You get your capital like almost protected, because hey, your money, the money inside the fund are invested in fixed deposit anyway. But anytime or whatnot, you can actually take that out, so they don't lock you down, you don't lose the interest. And I want to show you how we are actually doing this for our clients. And if you look at this, there's a lot of these funds that we can actually pick and construct an investment portfolio for clients. Let's say if I just select money market, right, and you can see that this list inside Asa's platform that we are using as an independent financial advisor, there are how many? There are more than 10. Let me actually filter this. There are more than 10 funds, and some of those names that you'll know anyway is by Maybank Asset Management, right, and Nomura Pacific RHB Cash Management Fund, So they have like 2 flavor. The one is the minimum initial was 50,000. That's a bit high, and some of them even like 250,000, right, like all these money market fund. So let's look at here something like initial investments of 500, right? Just click on this, and just wait a while, and you can see there's a lot of options over here. Kenanga. So what is Spring? So what we do is when clients have a certain amount of money to, let's say they want to put that into like fixed deposit rate rather than a fixed deposit rate without like going to the bank, because normally all those high fixed deposit rate, some banks will actually require you to go to the counter, over the counter, and that a lot of people don't like that, because you never know, right? You want to reduce your exposure to all those outside, right? You don't want to go out just at the bank counter to actually do your thing, because who knows, at that point of time, there could be someone who was infected with COVID, and because of you at the same time there, you might be infected. Even if it's not, the Ministry of Health might actually ask you to actually do a COVID test. So you don't want that. So how do you actually do this online, right? So a client that has an account with us in iFast, they can see that now this is an example of a money market fund, right? Look at the return for the past few years. 2015, 3.6, 3.5, 2016, 3.5, 3.38, 3.49, 3.35. Now, you know that all throughout these years, the fixed deposit rate, if you have put that yourself, the maximum I think you can get is about 3% or even sometimes 2.9. But in this money market fund, I say it gets you around like 10 or 20% higher. Then what? Now year to date, at the time of this recording, it's about 1.77. Now this is somewhere in September 2020. Now the thing is, you do not expect that because the fixed deposit rate in 2020 has already gone down to about 1.7%, right? So you do not expect this to actually still does a 3%. So always compare with the fixed deposit rate on that particular year, not to be mistaken by comparing it against like this one has given me like historically 3%. So it should give me 3% going forward 2020 as well. No, that is not the case, right? You also always have to benchmark with the current deposit rate on that particular year. So this, you should not actually compare with this. You just compare this 2016, the fixed deposit rate, compare that what has happened, and you know that this fund actually gives you a higher margin. So I would be quite happy if this fund gives like 1.9 or even 2.0 or 2.1 in 2020 for the entire full year. So that is how you should actually look at things. This is solution number one. Now, you know why this is important? You should, if you already save a capital and whatnot, you still have your interest better than putting in fixed deposit. But if you think it's not high enough, then I have something else for you. Just stay on. You know, like I promise, there are 3 options for you. And just before we move on, I just want to highlight to you, people say investing in banks like or public bank, Maybank, CIMB, they always get dividend. No. As of August 2020, you know, for that quarter, a lot of big top 3 Taiko banks in Malaysia actually don't give dividend. They suspend dividend. So if you're actually depending on dividend to get your to cover your expenses, you know that dividend is not guaranteed, right? Dividend is not guaranteed. What is guaranteed is interest from fixed deposit or bonds, which I'm going to talk about, right? As the solution number 2, how to double or triple your fixed deposit rate interest. So, like I say, solution number 2, top class bond fund. Now, how do you actually know this bond fund? That is, it is like in the top class. Now, for that, I have to actually bring you to this page called Lipper Leaders, right? Just go to this lippersleaders.com and let me actually refresh this just to show you how we actually do this. Or maybe okay, that's fine. So you choose Malaysia, asset type bond, and classification bond, Malaysian ringgit over here. And I like to actually do like look at for the past 5 years or 10 years, right? 5 years or 10 years are fine. So I'm going to just choose 10 years over here. And you could see that bond Malaysia in Malaysian ringgit, there are about 100 overs of them. What you want to do is, if you look at this fund name, now by default it is sorted from A to Z. What you want to look at is, you look at here, 10 years return, click on this one time. And this will be sorted in an ascending order. So from the lowest return to the highest return for any bond fund in Malaysia. Click that another time again, you have your sorted from in a descending order, meaning that the top returns, top total return will be at the top. Now you see that there's blank over here because some of this fund is actually bond in Malaysia, but then they don't have like 10 years. They have not been in existence for the past 10 years. So what you do is, never mind, just go to second page and maybe you go to third page. Now third page, you can see they have some figures over here. Now these are the funds, the bond funds that has given this kind of total return for the past 10 years. Now one of it being like by Maybank, it's called Maybank Malaysian Income. So you just do a quick calculation, 10 years divide 1 to 2% divided by 10 years, so it's about 10-12% per year. So that's good. Now going to this like RHB bond, for the past 10 years it gives you 91%. So 1 year I would say about 9%. And you have this thing like I'm Dynamic Bond by M Funds, which is subsidiary of Maybank. This one is subsidiary of RHB. It gives you about 84%. Now that's still every year averagely is about 7-8%, which is actually pretty good, right? So also in this iFast platform, you can actually do this. Now your option is of course to actually go to RHB Bank or any RHB office, and you could invest into this. Go to any Maybank or Maybank branches, you can invest into this. However, most clients actually don't want to go to bank if you don't already have an account. They open an account in iFast. What happened is, inside iFast, there are a lot, all these funds are actually available in one place. So bond, if I just select fixed income, right? So, and it will filter that in, right? If I just filter this by 40C. So let's look at some of these top Lipper Leaders, by the way, is like an independent kind of comparison web page for all the funds in Malaysia and anywhere in the world. So you see M Dynamic Bond is available over here. So if I click on this, and you can see M Dynamic Bond, the past 5 years performance has been like 5.35, 4.6, 4.8, 6.3, 11.06. Now this is really an outlier, but you will expect from somewhere between 4 to 6%. Now 4 to 6% when your FD rate is around 3% isn't really that impressive, right? However, when your fixed deposit rate has actually dropped to like below 2%, 1.7, 1.5, or even dropped to 1%, having this is actually impressive. Don't you agree? And as of year to date, in 2020, it's up by 5.54%, whereas your FD rate is keep on dropping. This one you could still sustain. But you see, not every bond fund is performing, which is why I want you to look at this, and only from this independent research by Thomson Reuters, that you have to actually sort this and know what are the top one, what has been historically the best one. So you pick that one and then you put your money into easily two times or three times or even many times out of more than your fixed deposit. Now, of course, if you invest into something that is subpar, for example, if I want to go to this page, right? The bond fund, some bond funds might even give you, like for some of this, might even only give you about 41% for the past 10 years. So you don't want to invest into this. You look at this and make your decision like what I've shown you using this website. But the implementation, you could actually go to bank directly, or you could actually, for our clients, they don't want to go out, they don't want to go to bank, don't want to do that, open an account over the counter. So they actually do this with us, right? So everything is available inside one platform, right? So the other thing I want to share with you is this. So this is your solution 2. Solution 3 is what I call as TCH method: tech, communication, and healthcare. The 3 big sectors that has a bright prospect going forward. Okay, the sectors will, without a single ounce of doubt, will do well going forward. However, we want not only to say the sector does well, right? Which one actually also give consistent dividend. And you know, some of this company, I was talking about public listed company or stocks, right? Some of them did not give dividend, only capital gain. So, but what you want is, you know, to replace consistency of like giving you interest or dividend in your fixed deposit. Now, in the beginning of the video, I talk about, if we are not talking about investing in stocks and all that. So why am I talking about solution number 3, about stocks in all these 3 sectors? Now, if for you, investing in these bond funds, right, is still not high enough for you, or you just want to allocate maybe 10-20% just to taste and put that inside something that gives you a potentially higher return, but you don't want the risk of the volatility when it comes to the stock. So you just focus on these 3 sectors, right? So instead of investing in these companies directly like that, you are talking about Facebook, Microsoft, and you know, Amazon, all that communication, you know, 5G technology, the company, and healthcare, as you know, all those healthcare company that does the vaccine and all that. You can invest in these stocks, but the other way to think about it, the other way I like to do it, is actually investing into this company where we invest in the infrastructure company that provide infrastructure support to all this sector that is growing. And what I mean by that, okay, just give an example. All these companies are big companies, but the thing is, you will never know in 5 or 10 years from now whether any of them are going to be, you know, bought out or going bankrupt, right? Because, for example, Amazon, Alibaba, they are competitors. Who knows? Amazon might actually wins the e-commerce war, and only Amazon will exist in 10 years. So if you invest in Alibaba, you know, you're going to lose money. And the reverse could be true. Or you could actually invest half into Amazon and Alibaba, which works. But I would actually invest into the company that provide infrastructure support to all these companies. What is the infrastructure support? Now, all these companies run on the cloud. So they need internet connection, and then they need a huge storage, like what we call cloud storage. So it's a cloud storage, it's not in the sky. You know that they have something called a data center or infrastructure to support this company, because all our data for Facebook and all that, you lost your phone, the information is not stored in your phone, right? You can still retrieve back your photos and all that. So it's stored in those a lot of these computers somewhere around the world, where those computers or those, what you call a data center, is owned by this company, or actually at least leased by this company. And the way we actually do that is to invest into real estate investment trust, because REITs are basically, as you know, commercial property. But most people only think of REITs as retail mall, offices. No, these are conventional REITs. The REITs that tap on the future trend, that are REITs like data center, these are like communication, cell tower, storage, and warehouse REITs. So these are also under REIT, and it provides support the growing trend of this kind of thing, tech, communication, and healthcare, and which is utilized by this company. But in turn, because the REIT structure only dabbles in the rental income, so the rental income for most REITs, stocks or funds around the world, for sure they would have a rental income coming in. And for sure, this rental income, the fund manager or the REIT stocks are almost, due to tax benefit, they're going to distribute 90% or more of their rental income or net profit, right? Or net rental profit back to investor. And that is how you get your dividends, interest, money that you can use to cover your living expenses. If you retire, you know, just want passive income and all that. So REITs are in the prime spot to tap on this on this big trend, like data center and all the industrial REIT. Now, e-commerce is online. However, they still need data center to run, and they still need warehouse to actually store the goods when it's being delivered to you, when it's being on transit. So REITs are all those buildings that actually invest in this infrastructure. So how we actually invest into this now? For example, if go back this platform, now this platform is actually, you know, it's like Swiss Army knife. If I actually search it like REITs, you can see that there are a few REIT funds over here. Now, I should have select this all, and you see there's a lot of REIT funds, right? REIT funds, global REIT fund like this, Asia Pacific REIT funds. Now, REIT funds come with higher price fluctuation, but still it gives consistent dividend, which makes it a very good kind of way to actually replace your, get like 6 times, 5, 6, 7 times more than your fixed deposit rate, because you can't get that from bonds. Very unlikely you can't get that from money market fund, but for REITs you actually can. So let's look at what we have over here, right? So you see that for REITs, for this Asia Pacific REIT fund, look at the year-to-year return, 13%. By the way, for a fund, this is a capital gain and dividend combined. 12%, 15% in this year, and in 2018 doesn't really make any money, spread even. 2015 another 15%, and year to date is down by 10%, right? But something that's manageable. Again, most of your money probably put into bond funds and all that, because bond funds will almost never lose you money, never go negative. But for REITs, because REITs are essentially stocks, but these stocks are obligated or give you very consistent income, dividend, in the form of dividend, due to the tax benefit. Again, I recap. So number 1, money market fund, get it about 10-20% higher than your fixed deposit rate in Malaysia. Solution number 2, you want to get 2 times, 3 times your fixed deposit rate. Bond fund, how to filter the best one. And if you want even higher, it would be tech, com, healthcare, but you can invest in this company. Or for me, the preference is what I recommend you do, because we are very dividend focused. We just invest into REIT that taps onto this current trend. Your banker, unit trust agent don't tell you this simply because these are not profitable products that they could sell you. And what a lot of those bankers agents do is they like to actually do what I call as churning. Now, what is churning? Let me actually Google this for you. Churning in investment. Right? Churning investment is the practice of executing trades, means make a lot of switching for an investment account by a salesman or broker in order to generate commission from the account. Now, that is again why they always recommend you to say that, okay, these are the thing, these are the hot sector, hot funds, hot stocks here. Then after you make your profit, we are going to sell it, and then you go to another sector or another funds or another stocks. So it could be, sometimes it could be in your best interest, but sometimes it could not be in your best interest. But in this kind of movement, like 2 and 4, some of them are actually doing churning, so they're actually earning sales charge or commission out of that. So that's why they always have to convince you. So you have to actually time the market here and time the market there. So you basically have to run one round. You basically have to always switch here, switch there, so they could earn the what we call as any transaction or the commission because of this thing called churning. So that being said, this is Lieu, and if this actually interests you, I think in the below or above, there's a link where you can just schedule a call. Okay, if you want us to do this for you. If not, I think this video provides with enough info that enables you to achieve the objective as promised, to get at least 2 times, 3 times, or even 5, 6 times higher fixed deposit rate, depending on your risk profile and what you can stomach in terms of the volatility, and actually conserve your money. And all these options, in my opinion, are the best option, way better than other options out there. If you are just looking to actually replace your fixed deposit, get it higher, and as a substitute for your fixed deposit rate, this will be your few good options. We cannot actually offer this for everyone, because we can offer this for our clients. If you're already a client, you are already our customer for any of our products or services, now I will be more than happy to talk to you. But in case you are new to us, I want you to actually know, we are not agents, we are not gurus, we are licensed independent advisors with our license from Security Commission and Bank Negara. We can actually do this for you almost like no cost, zero sell charge, right? You talk about the fund, you say, hey, isn't that expensive? No, there's actually zero sell charge, but you have to fulfill a few conditions first before we can do this for you. So check out the links below, click on the form, just fill up the form, and we need to filter out some of the answers. You must answer that honestly and truthfully, and if this is a good fit, we'll offer you to schedule a call, and we'll talk more on how we are actually doing this for our existing clients, and how there are probably a few questions that you want to ask, like how we are doing it. I'll see you in the next video.